On today's video, we're talking silver, cracking $45 an ounce for the first time in a long time and no signs of slowing down. We're going to talk about a little more about stacking again today, and we're going to talk about the 2007 Libertad. Stay tuned.
Ladies and gentlemen, your host, Titty Hunter.
Today we had silver crack $45 an ounce. Early morning hours, it had already cracked 45. It corrected back into the 44s when New York trading began, and then later this afternoon cracked 45 again. We have not seen $45 since 2011, so first time in a long time. And what I am showcasing here is this is a chart I've shown a couple times before, and a lot of folks are paying attention to it. It's silver's chart going back to the 1970s, and the pattern that's being highlighted here is the cup and handle. So this is a guy, his name's there on the bottom on this chart, Grady, HY, with ending in an HY. I follow him on Twitter/X or whatever you want to call it. And basically it's showing that we have a breakout. And I mean, the chart here is 2 days old. So he had there marked at $44.08, but we cracked 45 today. And what it's really showing you is, if you follow technical analysis and the principles of what is supposed to be the objective, the target for a cup and handle, he's kind of doing the calculation for you here, showing you the depth of a cup. And the depth was basically from bottom to top is a 9x move, 903%. So if we apply that to the neckline, that blue dotted line, horizontal, that's slanting upwards, that cross 4150, if you apply the depth of that cup, that 903%, that gives you over $350. He's got there on the bottom right, $370. So these are the types of targets a lot of folks are looking forward to. So this is just one of several metrics per se that I have talked about in the past. I've mentioned before, looking at the gold-silver ratio. I've mentioned the Dow gold ratio, and I've also mentioned looking at the price of gold and silver priced in M2 money supply terms to give you an idea, how close is silver to being fairly priced, overpriced, or still underpriced. And so this is just one of many tools to help you get there. But at the end of the day, you have to do your own due diligence. Consult a professional if you're not comfortable with this stuff. This is just my opinion. Again, these types of moves, like looking at when stocks make these types of moves, they start going parabolic, basically going vertical upwards. People start thinking, this is overbought. I'm just showing you here, again, I showed this the other day on a daily basis, how much volume on the SLV ETF is coming through on the daily. And we've been in the 20 to 30 million shares per day, 36 million today. And just to give you an idea, what was going on in 2011 when spot silver crossed $45, and this is kind of the range, that time period of April 2011, when the silver ETF SLV crossed over 40, and as it was pretty much going vertical, the volume structure daily was really catapulting. It really started, 78 million, 68 million, eventually got to 189 million, 125 million, 180 million again, and then really the big peak, almost 300 million in volume in a day. And that was an indicator that was the peak, and a correction was imminent. And I have mentioned this before, and I'll mention it again. The interesting thing about a cup and handle, and when folks talk about analyzing, you don't just analyze the chart itself and what's happening in the chart. You need to look at other indicators, and one of those you want to look at is the daily volume. So the paradox, and why I say you got to do your own due diligence, it's about you being comfortable with risk and the level of risk you want to assume. To have a break on the neckline, you want it to happen with volume to really flow with the nature of the dynamics of this chart pattern. So that's just another reason. So at the same time that it doesn't look like we're topping, it also is not that strong of a volume to indicate that a very big sustained breakout. But we'll see. But if you do look at silver and other currencies, it's really taken off. If you look at it in Canadian dollars, if you look at it in Aussie dollars, a lot of different currencies, those have broken into new all-time highs. I wanted to take some time again today to highlight what I talked about during the last video in terms of stacking, particularly I mentioned Wall Street Silver on Reddit last time around. I mentioned the Silver Degen Club. That's the other group of folks. And not saying it's a blanket statement for everyone in those communities. I mean, I joined both of those communities, but it does seem like the majority in both, like I said, they're obsessed with having ounces. Like, doesn't matter how you got to have those Scottsdale Kit Kat bars, 10-ounce bars. You got to have all that stuff. All that matters is ounces. And what folks are not really considering is thinking about liquidity, thinking about, the day you sell, in terms of what's going to be offered to you if you're just buying straight up pure ounces versus what I had recommended in the last video. The big demand was always historically, and I see it now, and I see it because looking at the bid-ask spreads and everything else, when folks are willing to buy back for 1-ounce coins from major sovereign mints throughout the world. And I had mentioned, I was around in 2011 when the price of silver was last running up above $45 an ounce. I was checking out prices. APMEX was around back then. The big ones back then really were APMEX and Kitco. Some of these other folks that you hear talking about now, they were not as, I don't know if they were around or not as well known, but a lot of folks were coming here. And what I did mention back in those days, for the major sovereign mint 1-ounce silver coins, right on the product page, like I am right now here for the 1-ounce silver eagle, you obviously have your quote there for what they're selling for, depending on the quantity you purchase. But they also had a very concrete figure for what they're buying back for. And I remember very distinctly at the time, if we were talking about 1-ounce silver coins from major sovereign mints, they were buying back for greater than the spot price. So essentially what was happening, the demand was so great from retail that they were willing to pay above spot to then sell it right away, well above spot. So let's say the spot price was 50, they were buying back at like 52 and then selling at 55. That was the supply demand dynamics. And a lot of these stacker communities, they're so focused on ounces. I gotta have ounces. So they're buying these random generics. They're buying these like all types of bars, all types of sizes. And at the end of the day, what I saw back then, even for APMEX's very own generics, the buyback was below spot back in those days. So just something to consider. And I wanted to talk about it further today for this reason. And that reason is, just earlier this afternoon, my buddy Bullion Cat sent me this video. This is from Silver Seeker on YouTube. A huge account, almost 250,000 subscribers. So I'm small fry compared to this guy. But I paused it exactly at the point. I want to play it, but I urge you to go to Silver Seeker's page. I'll actually post this link in the description to this video so you can get there quicker. And they talk all about this dynamic. But I mentioned this earlier. I mentioned this on Monday, and this video was from today. And here you have it, a coin shop owner pretty much telling you what I've been saying.
Some things that are not selling well for me at all are any size silver bars larger than 10 ounces. I'm accumulating kilo size bars. I'm accumulating 100-ounce bars that the public is selling back to me periodically. There is zero retail demand for those in my market right now. I bet you it's been a month since I've sold either one, which is crazy. Why? Because those right now are the lowest premium you can buy. So you're going to pay the least per ounce for those larger bars, but the demand is virtually zero. So that kind of surprises me, because usually as the spot price gets high, people tend to gravitate towards what's my best deal per ounce. Right now, that's the larger bars. Nobody's buying them. So that's a bit of a shocker for me. What people are buying from me in a much higher demand than we've seen are 1 ounce sovereign silver coins, most specifically American Silver Eagles. There was a period last.
So let me stop it right there. And he basically just said it right here. And this is an observation that I made over a decade ago, that because I was once a noob, and the noobs were flocking to 1 ounce silver sovereign coins. And back then, the same way he said it there, and I was once a noob, the first one I purchased was the American Silver Eagle. So just to summarize that point and tell you how important it is, it may be cheaper to accumulate, for example, 1,000 ounces of generic rounds or generic bars. But like I said, you got to consider whether you're going to sell a year from now, 10 years from now, whenever it is that you finally say, I'm going to sell, you have to consider when you go to sell, that stuff is not as liquid as the 1 ounce sovereign coins from the world's major mints. That's the big takeaway. Don't be so obsessed with, I got to have 100 ounces, or I got to have 500 ounces, or I have to have 1,000 or 5,000. I must have it. Think strategically, think liquidity, think long-term value. Now let's talk about Libertads. Today we are focused in on the 2007. So for various reasons, I have talked about the 2007 before, and in earlier videos, I remember very distinctly talking about the 2007 MS69 specifically, which is the top pop for that year, and what the going prices were for it. And around that time, it was a couple months ago, they were MS69s were going for about 400. And now, just to give you an idea of what's going on, eBay sold comps. We're just focused on the MS69 just to highlight this. You got PCGS MS69, almost $600 it went for. And NGC MS69s, 469, 439. So really, we are seeing an upward trend from the last time I've talked about these, where they were going for 400 and slightly under 400, and now we're at about 500 to 600. So these things are really trending upward right now. And let me show you why. In terms of mintage, that's one of the biggest drivers. It's 200,000 mintage for the 2007. It ranks at number 7 in terms of scarcity of mintage. So that is a big driver, and that's helping the value go up. Let's take a look now at the graded populations for NGC graded and PCGS graded. At NGC, we have 951 total graded, top pop of 69, and we have 248 69s. On the PCGS side, there are 401 total graded with top pop of 69, and there are 91 of them. In terms of the grading trend, like I said, there's 951 total graded at NGC right now, September 25th, 2025. Back in 2021, the total population was 331. And then when I last gathered another snapshot in 2023, there was 617. This post I put on Reddit was from 6 months ago, and 6 months ago, there was 845 of them. So in the last 6 months, we have gone from 845 of them to 951. Now let's take a look at eBay at the sold comps. What's been interesting in terms of patterns in the last couple of years, and kind of the trend is, 2005 had almost a mintage of 700,000. 2006 had 300,000 mintage, and now 2007 has 200,000 mintage. And just thinking, if you take a look at those videos really quick, you'll just notice that we're seeing then an uptrend of just for raw coins, completely not factoring in any type of grading. And as you'll see some of these pictures and the conditions, even regardless of the conditions, the prices are higher for 2007 than 2006, and higher for 2006 versus 2005. So I've turned on my filters here, the sold items. I don't know what kind of shenanigans are going on here with this one bid at $0 sold comp. I don't know what that's about. I suspect that'll likely get cleaned up from the system in a week or so. More recent than that, September 21st, you had a sale, raw coin, $209. Sorry. Another one here. This one looks a little more beat up. 2007 at $236.02. On September 20th, one here for $199. September 20th, again, $249. So very clearly higher prices here for raw 2007s relative to 2006s and even 2005s. And that's being driven predominantly by this low mintage, the 200,000 mintage.